What's going on, traders? It's Lucas here from the Commitment of Traders Club. Thank you so much for joining me today. It's the hottest day of the year over here in the UK, so what better time to learn some Forex in the shade. So without further ado, I've got the perfect video for you guys today, how to trade Forex. Let's get straight into the video. So guys, you join me here over on the chart, and today's video is just a quick one on actually how to trade Forex. Now, when I first started off, in my first few weeks or even first few months as a Forex trader, I was constantly looking for the perfect way of how to trade Forex. What is the perfect answer for this? And no matter where you look, you'll find loads of different strategies which people call the perfect strategy or the secret strategy, and that may be a moving average strategy or a simple price action movement strategy. But these are just strategies. This isn't telling us how we should trade Forex. So this is what I want to do about in the video today, is just teach you guys how to actually trade Forex correctly. So my first rule is create a plan. You need to treat Forex as if it's a business and not as if it's a gambling method. There's no reason for you to throw money at this and you've got a 50-50 chance of winning. You need to treat it as a business. Now, what do I mean by that? First rule is build a trading plan and stick to it. Now, if you don't know what a trading plan is or looks like, you'll find loads out there on the internet, but again, you can't find any that are personal and that you can actually build off of. So if you are a member, do head over to our website, become a member if you're not already, and you will get access to our trading plan. And with that trading plan, you can trade it yourself, or alternatively you can build on it and develop it and take bits from it and build your own. A trading plan will give you structure on how you are to execute trades in the market. Now, at first when I was starting out, I was doing, right, I'm going to trade one a day. I'm going to put trading every day, Monday to Friday, and see how I get on. And actually I lost more money than I made because I wasn't following a plan. I was just blindly entering, oh, this pair looks good, that pair looks good, let's put a trade on there, and boom, the market was going in the opposite direction pretty much all of the time. Very frustrating. And the reason being was because I wasn't looking at the market, wasn't following a plan, and I wasn't executing the trades accordingly. Now, that brings me on to my second point. Once you have a plan and you've stuck to it, you need to nail down your risk to reward before you even look at any chart. And what I mean by this is you need to understand and mentally get in your head how much you're willing to lose per trade. Now, there are some Forex traders out there who will say you can make 10k easily over a week, you can make 1,000 over a week, you can double your account size over a week, and sure, yes, you can do that if you have the capital behind you. I started off with a small account of £100 and I've grown that massively since then, and I'm trading now with a much larger lot size than that. But you have to start small to grow. And by doing so, you need to understand your risk and also your reward. When I first started, I was risking 10%, 20% of my account, and I was losing it very quickly. And by a couple of weeks, you've blown your account. Luckily, I had the capital to reinvest my small trading account at the time to build it up to where it is now. But what you need to understand is risk percentage that you're happy to lose. Now, for me, that's between 1 and 4% of my account. And traders, you need to understand that is going to you're not going to make as much money doing so, but you're going to be in the game for the long run. And this trading game is all about time and patience and not quick results, which most people out there will tell you. So when you do execute a trade, so we're looking at the chart here, Aussie dollar, US dollar. This is a particular trade that I took this week. Played out very well, plus 260 pips in my favour, which is fantastic. And my second rule of trading, as I say, is understand your risk before your reward. I risked 4%, but then my risk to reward ratio is 1 to 3. So I'm always going to get 3 times my initial risk back, which means I'm always going to be in the win. Now, traders, if that does sound a little bit boring to you, that you can't make huge profits overnight if you do this particular trading method, but let me tell you something. If you do a 1 to 3 risk to reward, you could be wrong 7 times out of 10 and you're still going to be in profit. You'll break even, I should say. Now, if you're wrong 6 times out of 10, you're still going to be making money if you allow the trade to continue for that 1 to 3 risk to reward. Now that doesn't matter if you're a swing trader like me, or if you're a scalper, or if you're a simple day trader. Keep the 1 to 3 risk to reward and allow the trade to tap you out on that 3 times reward, and 3 times out of 10 you're already in the money. So very, very important to understand that you need to keep your risk to reward on point and accurate at 1 to 3 minimum is my motto. And also don't blow your whole account by risking 50% of your account just because you want to make some pips if the market does go in your favor, because you will learn the hard way like everyone. Now that brings me on to my third rule of Forex trading and how to trade Forex, and that is keep things simple. The market moves in patterns. Now let's go straight away on Aussie dollar USD. What we can see here, and this is a previous video that I published, it was one of my trades that I took. The market makes nice clear patterns. It makes a previous low here, comes back for the retest. We know that it moves in waves, enter the trade. It breaks down, I'm waiting for the retest. When we zoom in we can see that nicely, the retest of the previous low, tapped it there, broke back down, and then I also entered the trade on the retest at this level. Again, I wait for it to push back down. Again, another 1 to 3 risk to reward trade, capitalized and taken. Market is simple. The more things you have going on, the more complicated it gets. You will see some traders on there that have 5-10 indicators all over the screen telling them different things. That may work for them, but it certainly doesn't work for me. What I find most important is if you sit back and look at the market on a simple level and understand what's going on and what the chart is actually telling you. The chart is telling you things and you need to understand what it is it's telling you. So my third rule on how to trade Forex is keep things simple. My fourth rule on how to trade Forex is understand what the chart is telling you, as I just said. You need to understand what the candlestick formations and patterns are telling you, and also how the market is moving. If you're a swing trader like myself, and you're not too fussed about intraday trades and taking a trade that lasts a few hours, if you want to play with the big boys and do some swing trading, you need to understand how the market moves. Now the market moves incredibly different on different time frames. So if we look here on the 4 hour, if we push it back, some would say that the market has been moving nicely in an uptrend, and that is true. For those people who are day trading, the market is moving in an uptrend and they'll be taking buy orders there. But as a swing trader, we like to zoom out and look at the market in a bigger picture, and we can actually see that the market has been making a downtrend for a very, very long time. So we are only interested in making sell opportunities, and again, as the market pushed up here for this retest of the previous high level, we capitalized on that downtrend around here because we knew the market was going to go down. The overall trend is to the downside. So you need to understand what type of trader you're going to be, and then if you are going to be a swing trader like me, get a copy of the trading plan. It will help you out. You need to zoom out and find out what the bigger picture is. When I first started, I was just looking at the 1 hour and 15-minute chart, and I was thinking, great, okay, we've broken structure, I'm looking for that continuation to the upside, for then the market to go the opposite way, because the overall trend is actually to the downside and you're trading against the trend, which we don't want to do. The trend is your friend. So that brings me on to the fifth point of how to trade Forex, and that is keep control of your emotions. Emotions are going to be your biggest and baddest enemy, and they will kick you out of a trade before you need to be kicked out of that trade. My rule is, and it's on my trading plan, is when you click execute trade, you have accepted the loss. So you know what, if the trade goes against me, I accept that loss. We've also accepted that profit. So you've accepted that the market's going to hit that 1 to 3, and if we go back on here, onto the 4 hour, on my previous trading week, we can see that, for example, here I accepted that I'm willing to risk, what's that there, 60 pips, which was 4% of my account. But in the meantime, I've also accepted that I'm not going to cut out this trade until I reach my 1 to 3, which is 165 pips. Now, as you can see right down here at the bottom of the scale, at the 0.745 zone, price was very close. In fact, probably only 10 or so, or maybe 20 pips away. Yeah, 20 pips away from stopping me out as a profit, for the market then to go all the way back and actually put me in a little bit of drawdown right at the top. Now my emotions are kicking me going, Lucas, you should exit this trade, it's going against you, it's going to go in the wrong direction, you should have closed it out when we were down there, you were only 20 pips away. But that's not what you need to do. You need to accept that you've taken the trade on the basis that you're going to get stopped out when price hits your take profit target. Okay, now you can, if you want to make the trade break even or trail a stop, but then how I found you're going to get stopped out more times than you need to be when the stop loss is dragging back down, then the market stops you out and then continues and hits your profits anyway. So my fifth rule of how to trade Forex is remain calm, stay patient, and lock down those emotions. If you want a few tips and tricks on how to do that, my number one tip is, if you use TradingView, which I'm sure 99% of us do, is just set an alert. You can add it there, add an alert. So what I do is on my take profit, I add an alert, and my phone will send me a message when I am at the trade, and again it will send me an alert when I get stopped out. And then you don't need to sit there watching the chart all day long getting nervous and anxious. So traders, that's 5 tips on how to actually trade Forex. If you want to get into the nitty-gritty about chart patterns, structure, candlestick formations, we're going to cover those in future videos. We are obviously a new channel, so any support will be greatly appreciated. And if you do want more out of your trading, you want to grow as a trader without having to pay a fortune for some other plans that other people are selling, head over to our website, Commitment of Traders Club. Join up for £30 a month for the basic plan, or £45 for the Platinum Club. It's a Canton Time monthly program. Guys, thank you so much for watching. I wish you all the best in this week's market. Happy trading, and we'll see you guys on the next one. Thank you.